Traders were hoping for a resolution to the tensions in West Asia. However, on Monday, oil prices spiked again and the dollar staged a recovery from last week's lows amid shaky global markets. The seizure of the Iranian cargo ships by the United States and the subsequent promise of retaliation by Tehran's senior military command cast doubt on the ceasefire, which lasts until Tuesday. The U.S. currency rose slightly as Iran shut the Strait of Hormuz again. The dollar sold off sharply on Friday when the strait briefly opened. But investors' flight to safety boosted the greenback on Monday, with uncertainty surrounding U.S.-Iran truce in balance. Brent crude futures jumped over 6% to above $96 a barrel, while the physical oil market is telling a much worse story from the futures market. Saudi Arabia's Arab Light crude is now selling to European customers at a record premium of $28 per barrel above the Brent crude contract. Well, the premium reflects extreme tightness in physical oil supply. Well, this comes as refiners compete aggressively for any immediately deliverable barrels regardless of cost. A physical blockade at Hormuz has recovered and removed more than 10 million barrels per day from global physical oil supply. That has forced refiners to pay whatever it takes to secure the delivery. Freight costs that previously ran about $1 per barrel now run as high as $25. Insurance adds further costs that do not appear in futures market prices. Eastern refiners are paying more than $175 per barrel in total costs once freight, insurance and other fees are added on top of the crude prices. In contrast, North American refiners are purchasing crude at prices ranging from $72 to $88 per barrel. That underscores the growing global price divide. The physical market is pricing the unseen scarcity, while financial markets are pricing the eventual end of the war and a return to normal supply. The real price of oil right now is way higher than what is showing on screens. In other markets, Wall Street futures fell slightly on Monday. That comes after the S&P 500 marked a record closing for the third day in a row on Friday. Asia-Pacific markets were mixed. Bitcoin and gold slipped as renewed Hormuz disruption stoked inflation fears. After climbing to a two-month high, the OG token slipped below the $74,000 mark. Along with digital assets, gold fell on Federal Reserve's dilemma and dollar's gain.